Morning and welcome, Patriot Radio News Hour. Joe and Jason, happy Thursday. I hope it finds you well out there as we survived the high winds. Power went out on a lot of different places, but the radio station persevered. I've been told, get ready for more high winds in the coming days in Colorado. Apparently now, yes, even the wind can cause the power to go out now. So, well, blame it on inflation. But I got good news today. We did get inflation data. Obviously, very late inflation data. But it was pretty good. Actually, I think it was really good. Unfortunately, everyone's kind of like, well, I don't know if you can actually believe the number. And I'm like, well, gosh, I don't know. If you can't believe the number, why even report it, right? But before we get there, our toll-free number, 800-951-0592, the website at allamericangold.com. Very quickly, next week, obviously it's the week of Christmas. We will be closed Wednesday, Thursday, and I'll say this. Patriot will be closed Wednesday, Thursday, Friday. Jason and I, we are leaving the door open to doing a Friday show. I think Jason, no matter what, now obviously, as long as the power's on, is going to do Fake News Friday, I think for sure. So you may hear from Jason and I Friday. You may not hear from Jason and I Friday. So that gives you today, tomorrow, then Monday, Tuesday of next week to get done what you need to get done. If you plan on selling anything, do it now, like right now, because the following week is New Year's, and we're probably going to do the exact same thing. We'll close Wednesday, we'll close Thursday, and maybe you see us Friday, maybe you don't. 800-951-0592. So what are we going to talk about today? Obviously, the CPI data. We'll talk about jobless claims. Matter of fact, jobless claims, might as well just get that one out of the way. 224,000, kind of just, I don't know, kind of just what it is. And it's just, you're scratching your head because they say the jobs data is not accurate, but, 224,000 jobless claims, which I'm thinking, like, jobless claims should be pretty easy. Right? Either you filed for unemployment or you didn't. It's not bad, right? I mean, it just isn't. So that was the number today. Then we have to talk. I have a lot more details now on Samsung. And I would say get ready to see more and more and more of this. And again, for most minerals, I don't care if it's gold, silver, copper, platinum, by the way, platinum 1900 and rising, palladium, those ones, but then you also, zinc, right? The obviously all of the rare earths, but very interesting, the details on Samsung when it comes to silver, and we'll talk about that in the next segment. Now, let's get to the CPI. Ready for this? A grain of salt is what people are describing their position this morning on the government shutdown, delayed release of the October-November CPI data. So I guess they just mushed it all together. I don't know. 2.7 was the headline year-over-year number. Everybody was at 3.1. So that's big, right? And that's a good big, right? They're saying, hey, the prices only went up, 2.7%. The core, 2.6% year over year. That was a number, basically, the estimate, 3%. Right? That was what most people were looking for. So another lower than expected number. There is very little additional data. I can't tell you where inflation got better, right? I don't know. They don't tell us. So it's just a weird report. And again, like I said, everybody's saying this is I guess, I don't know, grain of salt, whatever that means, report. They did say core goods and services down modestly. Energy prices were higher. One of the good news, rents and shelter inflation slowed. And they said gas prices. Hey, that got cheaper. There you go. 800-951-0592. Well, I hate when they just change stuff, but I've got it worked out. Jason was trying to help me get the Rumble picture back looking reasonable. But listen, there's two things. Now that this CPI report is out, and everybody says, maybe it's accurate, maybe it's not. But hey, this is what I kept telling you, and I've been telling you. More rate cuts are coming, guys. I guarantee it. I would go as far as saying if they need to massage the data, I think they will. I'm not saying that happened this time, but it kind of looks like it. But we'll take it. Let's see what the markets think. The Dow, which has had, 3-4 down days in a row, up 400 points, right? Closing back in, towards an all-time high here. The S&P's up 80, right? They love that. The NASDAQ's up 400. Probably the best news, the 10-year note, 411. So, here we were thinking 4.2, 411. We'll see how long that lasts. I'll give you the 411. Probably not very long. Crude oil, it's up 50 cents, but still only $56 in change. I don't know what's happening, but in the last 3 minutes, gold has shot significantly higher. Right now, gold is up almost $30, $43.70, and I'm just going to tell you. Okay, ready? Are you listening?
Yeah, listen.
Because I don't feel like you're listening to me.
Gotta listen.
I don't think you are. Literally, if you were, you would have been emptying out your bank accounts, buying silver and gold right now. I don't think you're listening. 43.83. Gold breaks and closes above 43.83. That puts us on track for 5,000. Now, does that mean it goes right to 5,000? No, of course not. But you understand what I'm saying. That tells all the computers and all these people buy. Silver, man, the heart attack kid, right? The little brother. When I got here this morning, Silver was like, right around 66, got up to silver, I think, touched $67. Either late yesterday, early this morning, right? I think it was late yesterday.
Late yesterday.
67. Yep. It went all the way down to $64 this morning in a matter of 5 seconds. And gold was down almost $25, literally in 5 seconds. I didn't know what it was, but I think I know what it is now. Everybody that still had shorts, that was your get out of your short position because the markets are going to go higher. Right now, silver 66.01. But like I said, it just jumped $1 higher in the last 3 or 4 minutes. There's just no doubt here, right? The silver itself, I don't know where the top is. I'll be honest, I don't know what the bottom is. I think the new bottom in silver, once this run settles out, is over $100. I think that will be the new bottom. You heard me right, bottom. Like, I'm talking like, remember how long $50 was the top?
Right. Yeah, it seemed like forever.
Right? Well, it was forever, right? I mean, let's face it, from 1980 to 2025. That was the top. That was 45 years. That's the type of bottom I'm talking about. Like, I don't know that in my lifetime, so I'm 55, that we will see again, when this run is done, will we see a price of silver below $100 ever again? I don't think so. I don't think so. Why? Well, let's talk about Samsung again. So the deal apparently is done. They formed an alliance with Silver Storm Mining. By the way, that is a Canadian-based silver miner. The mine is in Peru. And the deal is that Samsung will provide all of the funding to restart operations. Oh, wait a minute. Not Peru. My bad. We thought it was going to be Peru. In La Pera Silver Mine Complex in Durango, Mexico.
Yeah, Mexico.
So this is, again, Mexico, right? Mexico, the one thing Mexico's got, silver. They got tons of it. Well, this was a mine that was shut down. Obviously, the silver there, you needed a much higher price to make it work. And wow, was it expensive to restart it. So I don't know, right? Was there some problem with the mine? Was it collapsed? I don't have any of the details. But in this agreement includes a 2-year takeoff commitment. In other words, Samsung's doing 2 things. One, we're going to provide Silver Storm Mining all the financing to get the mine restarted. Okay? At very, very favorable terms. 2, they've agreed to buy everything for the next 2 years without, and all of it in concentrate. So what does that mean? Hey, don't even refine it, right? Don't even refine it. We'll just take the concentrate and whatever comes out of the mine, we will buy everything on top of that. On top of that, Samsung says that they have the right to extend that deal. So, again, according to Samsung, this is now their new strategic vision, which leads me to believe is Samsung going to do even more? Because, listen, this one mine that's not going to give Samsung all the silver it needs, right? It's just not. But the guarantee of purchase of concentrates reflects the confidence of a leading industry participant in our path forward. Of course, that was the CEO of Silverstorm. And by the way, this mine also has zinc. Jason, zinc.
Yeah.
It's gotten pretty pricey all of a sudden.
Yeah. Well, and I heard still they're going to pay $15 over spot this entire time. Like the entire time this goes on, $15 over spot. And from what I understand, the reason for that is instead of having a percent over spot, $15 over spot can be very lucrative. First of all, it's industrial. They're going to sell it. They could just charge it, right, Joe? So $15 over spot isn't necessarily bad for them. But if silver were to go to $200 or $300, that $15 over spot gets smaller and smaller and smaller. I think Samsung is saying very loudly that the price of silver is going to be exploding. And they're willing to pay, and do all of it, everything that Joe just said, and pay more for it because it's going to be cheap when they really need it, Joe. That's what I'm hearing.
Yeah. I just, and I'm looking at this deal here. Now, again, remember, this is an existing mine. It will not even come online. They're hoping to have this back online before June of 2026. So they're thinking, hey, things go right.
It's not bad.
6 months, we can get this thing going. And this is why I'm so confident in, I think we got 90 days. 90 days and we may see 100. 90 days and we could see $100 silver. I think it's going to really come down to that March contract. How much, if we see deliveries like they saw in the December contract, look out. Is this going to be the last deal we see? I don't think so. I think this is going to pave the way for a multitude of other companies to do things very similar. Now, the problem is, this is my guess. This is the best mine that wasn't being mined already that Samsung could find. So every mine, first of all, I don't know how many mines can actually reopen. Right? That's a limited number. I don't know what that is. Is there 10 more mines? 50 mines? I don't know. What I do know is, here's how expensive it is. Silverstorm, who owned the mine, wasn't going to reopen it at $66 silver. They weren't. The mine was going to sit idle until Samsung came along. And like I said, I got to believe this is the best one of all the mines that are idle. Why would they not restart it? The answer? Too expensive. Right now, how is it being restarted? Well, Samsung's going to pay all the money up front for us to restart the mine. And then they're going to buy everything we can get out of it for the next 2 years and possibly longer. These are the terms, Jason, that these companies are going to have to pay. And again, like I said, my guess is, right, why would Samsung pick this mine if there was a better mine, right? There probably wasn't a better mine. Why did Samsung have to commit to paying over spot to get it? Are you waking up? Are you listening? I know. It's almost Christmas. You're like, my brain hurts. I don't know. What does all that mean? I can't figure it out. 800-951-0592.
Hey, Joe, check this out.
Yeah.
Silver mining in Mexico represents 2.4% of the nation's gross domestic product.
Yeah, right?
Employs 350,000 people. Largest producer of silver in the world. It generates $1.5 billion in direct government tax revenue and an additional $1.84 billion in government revenue from exports. Canada owns, you probably knew that, Joe, but Canada owns a lot of the silver mining that goes on in Mexico.
Yep.
And during COVID, there was a whole lot of pushback to mining, and regulations were trying to be put in place. They were kind of hampering the silver industry in Mexico, and with the silver price going the way it is, and Samsung being there, I'm thinking there's going to be a lot more. It looks like there's plenty of places to open mines in Mexico still. There's plenty of places to dig it out of the ground still. So Mexico might get pretty popular for the long term for mining, Joe.
Well, and again, this is the key, right? You have to have something that was already there. This particular mine, all of the equipment is still there, right? The rock crusher, because you're talking about rock here. They're digging down into the rock, and all of the mill itself is all still there, which allows for it to only be, when you think about it, God, it's still going to be 6 months. And they're hoping 6 months, right? Let's not forget. If this was something where, we drilled some test holes, 5 years ago, but there is no mining operation in existence. Well, forget about 6 months, guys. You're talking 5 years, maybe 10, right? Because you got to get the permitting, you got the environmental stuff, you got to get all the equipment. It's not like you go buy a mill at Walmart, right? I mean, these things are enormous, right? This is like, hey, there's probably maybe one or two places in the world that can even build one. And you're talking about, hey, I can get you this by 2030 type of a thing, right? So, again, it is limited. But I promised, I know you guys don't like to listen that well. So what does it mean? It means gold and silver are going so much higher than anybody wants to believe, including myself. I'm sitting here talking to you about $100 silver and $5,000 gold, and I'm laughing in my mind because I honestly think it's probably going to be $250, $300 silver, 10 to 15 on outside chance, $20,000 gold. Why? Two reasons. One, the amount of fiat debt that's already exists, right? Listen, guys, if we were rounding up, the U.S. debt right now would be $39 trillion.
Right.
Okay? That's where we'd be. 39 trillion, because it's 38 trillion, 500 blah, blah, blah billion, $39 trillion. And guess what? They're printing more.
Trump was on the air yesterday, basically without saying it outright, saying, I want inflation. Did you see that? All the 1.5 million U.S. military getting $1,776. Go spend. Yeah, that ain't gonna.
We're gonna use the money from the tariffs.
There you go, everybody. Go spend it.
And $12 billion for the soybean farmers.
I really think Venezuela is starting to make even more sense because with the oil prices dropping, if you're pushing for inflation, and I think it's full bore, all steam, just as fast as they can. I think they want inflation big. And what if oil just becomes so plentiful, right, Joe? That'll stop the inflation. If you want inflation to stop, sell a bunch of oil. Forget gold and silver and what they're showing us. If oil is going to go down in price, then the inflation will stop. We'll have a recession, Joe. Things will start to go the other way. So I think you got to stop the oil. I think Venezuela stop the oil tanker. Does that make more sense now, Joe? Stop the oil tanker. Don't let that get out. Don't give a bunch of oil to the free market. Don't get it to China and Iran. That might make the prices go down. So stop the oil. Get the inflation rolling. I haven't heard Trump talk about opening up oil. Drill. He says drill, but I haven't seen a whole lot, right, Joe? No. That's actually happening this time around.
Listen, I'm going to say this. Not a lot of drilling at $55 in the U.S. Not a lot. Matter of fact, I'd venture to say maybe outside of stuff that was already in progress, right? Yeah. No one right now is drawing up plans to drill more oil wells at 55. But I don't know. You're right. We'll watch. We'll see. $40 billion a month printing from the Fed. We're coming up on the break. When we get back, and this is not a surprise to me, but once again, one bank in particular forced the Fed into the $40 billion a month, and I'm telling all of you now, yes, the Fed said, well, we can change it anytime we want. And oh, by the way, no matter what, from here on out, we're probably going to buy at least $20 billion a month. Think about it. Let that sink in. Let that sink in for a minute. So wait a minute, you're telling me that you're not quantitative easing is never going to end? Now you're saying, well, the debt's so big, $20 billion a month, probably in line. You know what that tells me? It's going a lot higher than $40 billion is what it tells me. But what bank forced the Fed into restarting quantitative easing? Remember your education. Reverse repo facility, good. Repo facility, bad. Talk about that. Return. 800-951-0592. Patriot Radio News Hour. Joe and Jason on this Thursday. Really quickly before we get into what caused the Fed to restart quantitative easing. Oh, wait. Who's been telling you about quantitative easing coming back? Oh, was that me? When did I start saying that? Oh, wait, like 9 months ago? Right? I mean, that long ago I was telling you? But really quickly, I'm going to give you an opportunity because I'm a nice guy. Rolls of U.S. Silver Eagles, $1,465. I want everyone to know. At $67, then let's say 25 cents, so about $1.25. Silver Eagles rolls will be $1,500. So you get them today, $1,465. Just know, like I said, I will not be shocked to see $1,500 today, tomorrow. I just won't be. I mean, quite honestly, let's just say we get to 75 before the end of the year. Like I said, I think we're gonna. Okay, just my bet here. I gotta give me a minute. Because I'm from public school, so How about $1,675? And that will be for back dates. If you want 2026s, gosh, you'd probably be, $1,700, something like that. So do you want to pay $1,700 or $1,465? It's a simple choice. On the gold side, it's the Christmas holiday. $20 gold pieces. You're welcome. $4,500. You know what? I'll tell you what, because you guys are weird. $44.95. So you can say you bought it for under $4,500. By the way, don't be surprised that gold will be over $4,500 before the end of the year.
Yeah, the Friday after Christmas and the Friday after New Year's, right, Joe? What's going to happen? Everyone's going to be asleep, right? Everyone's going to be paying attention.
Everybody, get ready. So, what happened? Remember, I've been telling you, right? The reverse repo. That means banks have more money than what they need. After COVID, it got to $2.5 trillion. Today, there's nothing.
Empty.
That's why I always used to say reverse repo, good. If you're thinking about, how safe is my bank? Pretty good.
And the reverse repo emptying was kind of that's when we're going to stop quantitative tightening.
Correct.
Yeah.
Exactly right. Now, of course, it's back. Then you have the repo facility. Well, what's the difference? The repo facility the banks use when they don't have enough money. So reverse repo, we've got too much. Repo, we don't have enough.
And repo has a kind of a normal service, Joe, right? Where it's overnight lending. Basically, it's overnight lending because one bank may have had more withdrawals. Say, hey, give me an overnight loan, and then next day we'll get more deposits, right? It's actually it's got a function.
Well, see, here's where let's separate that. So, overnight lending is common. One bank, hey, you know what? I'm a little short today. Another bank's like, well, gosh, I still got lots. Hey. Here, let me give you some treasuries. You lend me, $10 billion. I'll give you $10 billion of treasuries, and I'll pay you a fee for helping me out. And then the next day or the day after, whatever it may be, I'll give you your money back, and you give me back my treasuries. Okay, so that's overnight lending between banks. So you have, again, the reverse repo facility. All these banks have plenty of extra money, and they park it there, and the Fed pays them interest to do it. Then you have overnight lending. Overnight lending, some banks have too much, some banks don't have enough, and they swap, and the banks that have extra get a fee. And usually how it works is, hey, sometimes I'm the one borrowing the money, sometimes I'm the one loaning the money, but it's very short in duration. When banks are short, they go to the overnight lending, and all of a sudden, nobody has money to lend them. Then they go to the repo facility, which is the Federal Reserve making money out of thin air, saying, okay, you give me the $10 billion in treasuries, and I'll give you the $10 billion bucks, and then you pay me back later.
And sometimes it's not that they don't have money to lend who needs it, is that it's looked like, well, I don't know if I want to lend to that place. I don't think they're solvent.
Well, that's right. There's two reasons. So, in the overnight lending, there's only two reasons not to lend. Because you get a fee. So you don't lend if you don't have the money, and you don't lend if you think the other bank is on the verge of going under, right? Otherwise, of course you would lend it to them. Well, right now, who's the bank that's refusing to lend We're going to tell you who that is. 510-592 Patriot News Hour. I don't even know why I given out the phone number. Well, I guess I take it back. Someone just, I don't know, man. I think Arlene called somebody. I don't know if someone called us. 1465 U.S. Silver Eagles. Tell you what, you buy 300. It's 15 rolls. 1460. Buy it before they're 1700. Buy it before, listen, okay, ready? 90 days, give or take, $2,000. Yeah. Hello. $44.95, $4,495 on a $20 gold piece. 5, 6, 10,000. That's what's coming.
It's a mindset, Joe. I mentioned that I saw that video, and the guy he was buying silver from a local shop, YouTuber, and he's like, "Look, silver's at $65. Like, I have no problem buying at $65." He works as a technician for Tesla in the solar panel part of the company, and he's like, and he said just what Joe said earlier. In 3 months, it'll be $100. He said, any ounce I buy below that is profit. He's like, I'm doing well. He said, I have no problem buying in the 60s, the 70s, or the 80s, or even in the 90s. I'm going to keep buying as much as I can because his mindset is 100. If you're thinking $100 silver and you're thinking $6,000, $7,000 gold, but everything we're selling right now is putting you way ahead very quickly. And we don't get to do this all the time. This is just the way the market is now. The last couple of years, we don't control it. This is what's happening.
Yep, just like at Samsung. They don't mind. They don't mind at all. By the way, so back, who is it? Who ran out of money? The biggest overnight lender, J.P. Morgan Chase, has run out of money to lend, which has forced all the other banks into the repo market. J.P. Morgan's cash deposit has fallen by 57%. So the excess money they used to have, they no longer have, and the Fed was forced to once again step in and start quantitative easing once again because the biggest U.S. bank doesn't have any more money to lend. They've withdrawn $350 billion in cash from its accounts that they had at the Federal Reserve. So think about the reverse repo market. J.P. Morgan alone had $350 billion in there. And listen, this isn't going back 3, 4, 5 years ago. No, we're just talking about a year ago. Gone. Well,
they had to buy 750,000 ounces of silver recently, right?
Their balance sheet went, yeah, that's true, from $409 billion at the end of 2023. They're down to $63 billion. Uh-oh. By the way, their treasury holdings was $230 billion, now $450 billion. Yeah.